my gosh.
You're good. You're good.
Good afternoon, everyone, and thank you for being here with us once again. I know it's a lovely Saturday out there, but you chose to be here with us, and we are grateful. Once again, welcome to Your Financial House, and we have Miss Judy doing a series for us. Last Saturday, she shared with us why is it important for us to save?
That's
And that
right.
was an amazing topic. And this week she has another topic for us. And we talked about why is it important to save. So this week she's just going to expand on that a little bit. And we going to share with you some information on how to start saving.
Yes.
And then we're going to dip in and then start again with some emergency. If some emergency comes up, what do you do? All right. So last week we talked about yes, you must save. And this week we're going to show you how to save and why is it important for you to save. So I'm your host, Avril, Your Financial House, and we have our special guest, Trudy, who has been doing an amazing job for us. And we welcome you, Trudy, once again to Your Financial House. And
Thanks
we
so
hope
much,
that
Avril.
we didn't take you again from your busy
Oh,
Saturday.
absolutely
So
not. This is something planned. This is something that is important, and I want to
right.
thank you as well for being here with me because this is something that we have to deliver. So
Awesome.
people,
Awesome.
yeah.
All right. So let's just get on with it and
Yeah,
let
perfect.
if anybody's hearing me, I would like to know that you're hearing me. Please put some love in the chat for us so we can know that you are hearing us clearly and that you are able to see us and everything is working fine and everything is copacetic.
Perfect.
All right. I think,
All right, we're
yeah,
good to
so one or
start.
two loves, yes. So we're good.
Okay, perfect.
All
All
right.
right. So, as I said, Avril, last week we looked at different objections that people have, when it comes to savings, why they can't
Mm-hmm.
save. They have, certain situations, circumstances that come up. So there are a lot of reasons why we don't save. And, we went through last week the importance of making sure that you make that effort to save
Mm-hmm.
and the possibilities of how you can overcome it. But then what I wanted to do this weekend is just to dive into how to save, how to make that a reality, basically. So as usual, I have my slides, so I'm going to pull
Yes.
that up
Yes. Go
so
ahead.
everyone can see. All right.
Go ahead.
So I wanted to, particularly hone in on that there are four types of savings
Okay.
available. And I think a lot of people are aware of these savings, but it's always good to just repeat it and show people, how much they should be saving in these types of savings and where to save it as well. Those are the two important points that we'll be going through. All right.
Okay. I know
So
last week sorry, I know last week
yeah,
we shared about, why it is important for us to save. And this week you're
that's right.
showing us, that there are four types of ways that we could save. So that is
Yes.
amazing.
That's right, exactly. All right. So the first one that people talk about a lot is having an emergency fund or the do not touch fund. All right. So this is where some emergency has come up and you need to deal with it immediately. All
Mm-hmm.
right. And there are different examples for this type. It could be a job loss where suddenly you're out of a job. This has happened to people more often than one wants it to,
Mm-hmm.
especially with the pandemic that has occurred. A lot of people have gone through this, unfortunately, as well.
Mm-hmm.
So, job loss is one reason why an emergency fund is so important. We need to prepare for this in case it happens. And a medical emergency,
Yeah.
something suddenly comes up. It could have been an accident, something that you weren't aware that you had and suddenly you have to undergo surgery. And it
Mm-hmm.
costs lots of money. So having funds set aside for medical emergency is
Yeah.
definitely a plus. Emergency travel. right? A lot of us here are immigrants to Canada or to the US as well. And there may be a need for us to go home to see our parents, to see our family, or something suddenly came up. Do you have those funds set aside to be able to meet that kind of emergency? Right. And then we have just all sorts of other unexpected occurrences. Something could have happened around a home that is not, if we had some kind of freak weather and your roof is going.
Yeah.
These are reasons why having something set aside specifically for that, right? And having an emergency fund is so important because it then means that you don't have to swipe the credit card.
Yeah, right. And that's bringing us back to
that's right, right? The debt. Exactly. So having something set aside. So, I mean, the next question that normally comes up from that is, how much should I have in an emergency fund? And that's a great question, right? They used to say 3 to 6 months, but I think it's better if we increase that to 6 to 12 months, given what has happened with the pandemic. Right? Where it has gone on longer. A lot of people have been out of work for longer as a result of the pandemic. So it's recommended 6 to 12 months of your expenses. And your expenses would be like to cover your rent, cover your mortgage, monthly insurances that you have to cover, your car insurance, your health insurance if you're paying for your own health insurance, your life insurance, making sure, because you don't want to, these are things you don't want to stop paying for. You need to make sure that those are in place. So make sure that those things are covered. Your utility bills, you have to make sure that you have lights at home, still heat if it's over winter. And of course, food. These are just some basic things that I've mentioned here, but this is just an idea as to how much your emergency fund should cover, right? And again, this brings into mind that the need for a budget. And need to know what your amounts are, what your expenses are, so that you're aware, so you know how much to save as well. Okay. All right. So that's the emergency fund, or the do not touch fund. Okay. All right. So the next question is, where do I save it? Where do I put these funds? And you want to put it somewhere that you cannot readily get it. So you can't readily access it, So you set it up where you can have access to it in 1 or 2 days. Yeah. And that's ideal, right? So as you will only be using an emergency fund, what the financial coaches will tell you is consider investing it in some sort of investment account rather than a pure savings account. All right. Because emergencies, you don't plan for these things. These things happen. And they may never happen as well. So you want to make sure that your funds are somewhere that it's earning some sort of decent interest, but not at risk either as well. Okay, so that's it. So you're looking at probably a high interest account. Some banks have that, and this is something I'm talking even above a savings account. You need to be getting some sort of decent interest on this. An online banking account where you can simply do a transfer into that account, and usually with those accounts you tend to get a little bit more interest as well. A TFSA account is great for this as well, because even for you to access a TFSA will take 1 to 2 days before you can get your money out. And a money market account as well is a good idea.
Well, I just wanted to interject here and say that with your TFSA account, so that means when you're taking out that money, no taxes will be paid on that?
That's right. So there's no tax on the interest, and you've already paid your taxes, because this is after they've taken out your taxes from your pay. You're contributing that. There's no further tax. Yes, that's right.
Awesome.
Okay. All right. So emergency fund. That's for emergency fund. The next one, the short-term savings of the fund, or the I Can Touch fund. Yeah. All right. So this is a fund where you these are the things that you do regularly each year. They come up each year. So it may be where you have to buy a gift for somewhere, be it an anniversary, a birthday, anything like that. School supplies. This is something parents, we have to do every year for our kids. We have to buy school supplies. Some of us have to buy uniforms or clothing and so forth. So the kids are ready for school, right? Going for a haircut. how often do you go for a haircut or go to the hair salon, right? If you're going every 3 to 6 weeks, that's something set. So you can set aside money for that, all right? If you know that every year you and your family want to travel, all right? I know it's not happening very much right now, but I wanted to include there because that could be included, as a short-term sort of savings as well. Even if it's that we travel to a different province, we can set aside that because we know we want to do that every year.
Right? Or we can explore Nova Scotia because there's so much to explore in Nova Scotia.
Exactly.
Exactly. So your short-term just go back to that one slide for me, please.
Sorry. Yeah.
So your short-term saving is the one that you can touch. So that one you can dip in anytime you want. Your birthday, your anniversary, you want to throw a party for a friend, you want to travel.
Yeah, but I want to be specific here. Yeah, these are things that you plan.
Oh,
right? This is not for any and everything. These are things that you have planned, and so you budget for it each month.
Awesome. Okay.
All right. So that's important. That's important. It's not a miscellaneous kind of account.
Just making sure.
That's right. Absolutely. So how much should I save or should you have in this short-term savings account? And again, for each one of us is going to be different. It's going to be different. So you need to create a list of the items. All right. If you want to celebrate your anniversary every year, or that happens, you go to dinner, you write that down. How much you're going to spend or how much you spend on average, how much you spend on an anniversary gift, how much you spend on a birthday gift. You write all of that down, right? How much does it cost for the school supplies every year? You've done it for so many years. How much does it cost? Write it down, right? Exactly. How much does it cost to, for you to go to Cape Breton or to PEI? You write that down so you have that cost, right? Then once you have that and you know how much you're going to spend annually on these things that come up, then you divide it by the year so you get a monthly amount, right? When you have that monthly amount, that's how much you will be putting into the savings account on a monthly basis. That's how much you save. Okay. So you'll see with that account, the I Can Touch account, it will go up and then it will go down. Right. And each year you're maintaining. But the beauty of it is that you don't have to swipe your card.
Awesome. That's amazing. So if I am getting paid every 2 weeks,
yes,
how would I be able to do that?
Yeah. So if you're getting paid every 2 weeks, again, you are looking at, if anything, you divide it by 2.
By 2.
Yeah. It's bi-weekly. If you're getting paid, it's probably 26 times for the year that you get paid, then you divide it by that. And so you're able to calculate to see exactly how much you need per month to save, so that you're basically spreading that cost across the year. So it's not going to hit you all at once, but you're planning for it and you're saving. Yeah.
It's so funny because sometimes, yes, you plan to do this.
Yes.
You've saved for the travel, you save for the school books and everything, school supplies, and then something else come up on top of that. Your car broke down, or so it's good to basically have those funds for you to be able to differentiate. So it's like you'll have in little envelopes,
That's right. Exactly. And it's interesting how that you said envelopes as well, because that's what's recommended for these kind of short-term savings as well, right? So where should you save it? Because you're going to need this as quickly as it happens. You should save it somewhere that you have readily access, so that you can get it as soon as. So a savings account at the bank, that will work perfectly for this sort of savings. Envelopes. Keeping it at home in envelopes, and you write on your envelope what it's for and specific. So it's funny when you see it, okay, I can't touch that. That's for that. that sort of stuff. So
you close your eyes and you say, "Oh, I can touch it," which we have done many times, because we have to be very frank with ourselves. If we want this, we need to follow the rules, and so we can get the results in the end.
That's right. Be consistent, make a habit of it, and it will happen. It's scientific. If you create a habit, it will, it will happen. Yeah. All right. So the third one is a specific goal savings. And it's I know what I want. I just need to pay for it fund.
Yeah.
All right. So for some people, they've decided, yes, we're going to get married. We're excited. It's going to happen in the next 2 years. So they know how much it's going to cost. So they can work towards savings towards that. Or they're looking at buying a home, and this goal of a home can fall either in the specific goal or a long-term goal. But I wanted to put it here as well. So if you're looking at buying a home, you need to save for your down payment, right? So working that out, saving, this is where that goal will come in. Your honeymoon, that's usually a big deal. You spend a lot there as well. Or buying a car, being able to put some money towards the car, you want to be able to save that as well. So these are the types of goals that you would put into this kind of fund. And it's very specific, right? And so this goal, I've just highlighted a couple, but this can change. You can have something that comes up that you and your spouse or yourself decide, I want to get this. I want to be able to fix the yard around my home. So this is going to be my specific goal that I am saving towards, right? So that's what this goal or this type of saving works towards here.
Yeah. Okay? I just find that sometimes we don't prepare for those things because, we meet each other, we all in love, and then afterwards, bam, we want to get married and we have to go and take a loan. Or bam, we want a car, we go and take a loan. And we don't realize that all of those loans and interests and all of that, it basically putting you into more debt. Not basically, it is putting you into more debt. You know, and then after the wedding or after the marriage has done, you into the marriage 12 years, you're still paying for the marriage. This is so ridiculous sometimes when you're able.
So it's about planning. That's right.
Yeah,
that's
it's all about planning.
Absolutely. Right. Okay. So how much should I save to these specific goals? And again, it's working out what you want and working out what the cost is to be able to achieve this goal. Okay. Once you have that, when is the event happening? Right. Yes. So you have the cost and you have the timeline. Once you have those two things, again, the same method, you divide by the months you have left before that goal is supposed to happen. And then you have the monthly amount that you should be saving towards that goal. And this is basic stuff, but it's always good to just see it so that you can realize, this can happen. Because many people, this is how they operate. This is how they do. So this can be done.
Well, it totally makes sense, Trudy, because if we have those, whether it's long time or short time goals, and we know the times the time limit. I mean, every goal you say, okay, today I want to save $25. Obviously, you'd put $2 until you could save your $25, but you have that time. By December, I should save $25, or by January, I should save $50. So this is so good that you're able to bring that to us. Specific goals, saving, I know I want, I just need to pay for it.
That's right.
So this is amazing.
All right, perfect. So the last one that sorry, just before I go to that, again, the question comes up, where to save these sorts of goals? And again, because you have a timeline, it will depend on your timeline as to where's the best place to save this. All right. If you're looking at something that's going to happen in the next 2 to 3 years, then you can put it in a TFSA because you could be able to get some income, some interest out of that. You can also look at putting it in a high interest account as well. Similar, because again, you want to get some interest because you have some months ahead of you before you're able to access this as well. Right?
Okay.
Yes.
So for those persons, sorry, just before you go, for those persons who not in Canada and who doesn't know what a TFSA account is and all of that stuff, what is your recommendation for them?
Again, it's going to be some sort of account. It could be a registered account with the government as well, or you're looking at an account where you get some sort of higher interest. Some banks offer like a a certificate of deposit, a fixed deposit
Yeah.
account,
Yeah.
that would work as well. That would work
Yeah.
as well. And those are
Okay.
typical for other countries to have too.
Yeah. Awesome.
Yeah. All right. And the final types of savings that we wanted to chat about today is the long-term savings. So this is when we're looking at retirement. For some people, this could be a long-term goal, could be, again, they're being able to own a home. At that point, that could be a long-term goal. And that last one I have there, that one was for retirement. I did not want to put one with old people.
Retire young.
You don't have to retire old, you know, exactly. It does not have to be that way. So I wanted to put something where you're still enjoying life, you know, and doing what you want at whether it's in your 40s, 50s, 60s, you know, that's
well, somebody in that time, you know, they still retired and they still want to enjoy life. But yes, I agree that you could have the elderly and you could have the middle age, and you know, and persons retired at 50 years old. Yeah. So
yeah, for sure. All right. So I didn't change it here. All right, this is it here. All right, so again, with the long-term goals, how much should I have in that fund? All right, and the question comes up: how soon do you want to retire? All right, and this is one of the first questions that I asked when we did the "What's your FIN number?" Right, which helps to determine that as well. Okay, and so this is where your FIN number comes in. All right, and do you know what yours is? Have you worked that out yet? All right. And this is something that, again, we should sit down and talk about. Give me a call, send me a message. I will sit down and help you figure out what your FIN number is. But you need to have this so that you can know how much you need to retire. And as a result, how much to save to retire. As well.
Okay, so just remind us what our FIN number is supposed to be. I know you said that it is a figure that you're looking at but the amount of money that you need until you retire, or is it when you retire that you
need? So it's your financially independent number. It's your number that you don't need to depend on anybody else. You don't have to work. So you have that saved so that you can live off of that comfortably. All right. So that's what your FIN number is. And so it's a lot of factors that comes in when you're looking at your FIN number. So it's your timing of your retirement. It's also looking at how much you have saved already, right? And checking to see if where you have it saved, is that working for you? Are you getting the interest that you expected? Where will it be when you're ready to retire? And this is something that a lot of people don't look at, right? And I was guilty of that as well, where I just assumed when I'm ready to retire, it will be fine. But it's so important to keep an eye on it because things change. So have a look at the number, see how much you have currently saved, and see what you really need to be able to get to where you need to be, and then make sure that you put it in the right account so that it will earn for you and you have your money working for you.
That's right. Yeah, I think we just need to make known that what is your FIN number and the importance of having it, because persons are retiring and they're retiring, well, they work for 40 years and they retired at 60, 65, and they only have $40,000 in the bank to live the rest of their life. And we know $40,000 or $50,000 is not going to go that far. You know, standard of living is going up. Persons, you go to the grocery store every week, the prices are up. Inflation is there. So it's not gonna, it's just how important it is.
That's right. And that's why it's so important to pay attention to these things now, you know, as early as possible, so that you can get into gear and get working on it and get going, and make sure that when you are there 20 years down the line, that you are in fact ready and you can comfortably retire.
Okay.
All right. Sorry, this was just one more point here that I wanted to bring up, because it's something to consider too, how much you have left on your mortgage, because you don't want to be paying for your mortgage when you retire. Ideally, you want to be able to finish paying off for that as well. So that's something to consider as well. So, you know, these are just some little points to mention, and there's so much more. And again, reach out to me. Let's chat. Let's see how we can help you to get into a position that you know what your money is doing for you.
That's right. That's right. So, ladies and gentlemen, this is Trudy giving us the best of the best, and she has given us tips about saving regarding your financial house, and she has given us tips about the different ways that we can save. And Trudy, would there be an app where you can show, probably, I'm not sure if there's an app where a person can do their budget to help them into saving, like a Mint app?
Yeah, as I said, yeah, there's the Mint app I found is very helpful. That's something that you can definitely use, and it can track your money so you know where your money is going. And as a result of that, watching your spending there, that app can then help you set up a proper budget for yourself as well.
Wow,
and
great.
Oh, sorry, Arvel, just the last thing I want to mention as well in the long-term savings, and this is kind of specific to again, people living in Canada, where you save, and I'm sure you people are aware of this, making sure that you have your RRSPs set up, your TFSAs, and just remember that those are just vehicles, right? You choose what those are going to be invested in. Okay, and it's usually the recommendation that you invest in mutual funds, because you get a nice spread, and it spreads your risk there with your investment. So investing in mutual funds are a way to go for these types of investments. And there are different reasons why you would, set up an RRSP versus a TFSA. And again, this is something that I can chat with someone on a different time, as to the differences between an RRSP and a TFSA. Right?
Okay. So,
but again, making sure that you have it in an investment, because this is a long-term investment you're looking at, and you want that money to work for you, but you also want to make sure that you are comfortable with these investments.
yeah.
Right? It's not going to be something where you are checking every day because you are so nervous. Making sure it fits your needs is so important.
Yeah. Those of us in Canada, just expound on the RRSP, what it is. Just the short version, and the TFSA. Just elaborate a little bit for us. I know you're going to tell us more, but those persons who are watching now, who are eager like myself, just tell us a little bit about RRSP. Why is it important? Well, you already said why it's important. It's just a vehicle where you could get more interest.
But the RRSP is a registered retirement savings plan.
Yeah.
And again, this is monitored by the government, and the TFSA is tax-free savings, a savings account. And again, that's monitored by the government. And it's monitored by the government in that you have a limit that you're allowed to put in there as well. But because there are tax benefits attached with these investments, that's why it's a registered plans by the government as well. And again, if you want any information, reach out to me. We can definitely chat about it.
Okay, so thank you so much, Trudy, for your time. Ladies and gentlemen, Trudy gave us all the information that we need. Her contact number is in the chat. Her email address is in the chat. If you need to speak to Trudy, please PM her, private message her on Facebook. She is on Instagram as well, and she is also on LinkedIn. Yes. So you have 3 places where you can contact her, and her email address is on there. So please contact Trudy, and she will be able to help you with any of your financial needs. This is your financial house today, Saturday. If you find that this information was important, and everyone needs to know that information, whether you're in Canada or not, please share this link or share Trudy's information, reach out to us, and we can tell you more of how you could have that perfect financial house. Once again, I'm Avril, and this is your financial house. And thank you so much, Trudy, once again, for your time, for being here with us. And So far, you're doing an amazing job. I cannot wait for next week to say, what are you going to talk about next week, right? Because you've told us so much about paying yourself first method, right? Yes. That's the first topic we touched on, I believe. And then the second one was, why is it important to save? And then today you're telling us the ways of how we can save.
That's right.
So these are amazing topics, especially if we want to keep our financial house intact.
Yes.
So once again, ladies and gentlemen, thank you.
Thank you.
All right.